Hi there, welcome to the Ecofina Financial Channel. My name is Philip, and today we'll be discussing about one of the biggest companies in Nigeria. Before we go on, I want to encourage you to subscribe to this channel so that you can receive regular updates. We share economic and financial insights. Also, it will be good if you can like and share this video. It will help this channel grow a lot. So having said that, let's go straight into it. Let me state clearly that what we share here is just strictly our opinion. And if you have to make a decision whether to, go ahead with any of the things we advise here, it would be good to talk to your stockbroker. But we will definitely share our opinion on what we believe. So today we'll be talking about Dangote Cement. I'll be talking about whether it's a good idea to buy into their stock. Dangote Cement actually released the full financials for 2021, and it shows very impressive results. The company generated 1.38 trillion naira in revenue, but what's even much more impressive is that they were able to generate 364 billion naira in profits. That's a 32% increase on 2020. That's massive if you ask me. We'll look at some of the reasons in favor of buying into Dangote, and then we'll talk about some of the risk. We always try to give such a balanced opinion so that you can make the best decision. One of the things is that domestic and export sales were particularly key drivers of the growth of Dangote. Dangote Cement operates in actually 10 African countries, but of course they export to some other African countries as well. Nigeria remains the major market, and even in 2021, accounted for 72% of all sales. If you put it down in naira, that's about 993.3 billion naira. So Nigeria still accounts for the larger parts of the sales, but it's good that they're also growing in other markets as well. So one of the major factors in favor of Dangote Cement is that they are in an industry which is stable, which is not affected too much by what the economic conditions are. And that's because it's in the cement industry and construction activities continues to increase. And what's more is that they are able to pass on the costs of cement, the increasing costs to customers. Even last year, it was recorded that in some quarters that there was like almost a 54% increase in the price of cement last year, which means that they were able to pass this cost on to customers. And that's good because it means that it's hard for them to be choked when it comes to price. If the expenses increase, then they know how to increase their revenue or to increase their price to meet up with it. And then they have very good ratings, even from global credit rating institutes like GCR, which rates them at AA+. And then, Dangote Cement is, of course, doing so well in Nigeria, and cement will probably continue to be something that is good, especially in the developing market or in developing markets in Africa. Construction activities are always there. And even though there's competition from companies like Lafarge, the market seems to be large enough to accommodate all the major players, which is why, of course, we believe the Dangote Cement has a very bright future going forward. And it looks to be very well managed as well. Year after year, they keep churning out good results. And that's very, very, very impressive. So that's it for that. As to the risk, of course, there's always the risk of regulatory changes. I remember some 2 years back or some years back, there was this border closure, which threatened their export activities. So, of course, at some time it was relaxed for them, but those are some of the things that can really affect them. And then, of course, because they operate in other African nations as well, they will not always have control. Even in Nigeria, they can't have total control over what happens in terms of regulation. So those are just the risks that we see. For the 2021 result, they've declared the final dividend of 20 naira per share, and that's up from 16 naira per share, which they declared in 2020, which also shows you that they are increasing their dividends almost every year. So not only do you have the capacity to earn from, a stronger capital appreciation, you also earn from dividends because they pay dividends regularly. So Dangote Cement is definitely a stock you have to look out for. And if you find all the variables we've discussed interesting, you might want to consider buying into the company so that you can own some stake. Like I said earlier, that is just strictly our opinion. You can do your research, contact your stockbrokers to make a decision. So that's all we have for you this time. Remember, just share from the comment section what you think is, making Dangote Cement, grow at the rate at which it's growing. Let us know your thoughts. Ask questions if you have them also, and we'll definitely respond to them. So see you next time on this channel. Remember to subscribe, and we'll be back with you.